Porter Nompu Siziba caught up with ARM's CEO Mike Schmidt earlier today. She started by asking how ARM had managed to differentiate itself in the platinum mining sector.
I think the differentiator is that we are smaller units, separated. We're not centralized, and so as the bigger houses are. And so we have escaped what I would call, we have escaped the fire. And obviously we learn out of the consequences. But I think more importantly is that because our units are a lot smaller, we are a lot closer to our workforce. And we are a lot closer to our unions. By implications, you can manage that relations and business relations as both sides, whilst both keep their independence. Certainly there's a fundamental understanding of the business and business principles on a far better basis based on the quantity of numbers.
How did the coal segment do? We know that the international price of coal went down quite substantially. How did your segment manage to perform given those circumstances?
The operation that did not perform well is PCB. That's the participating coal business, the other side of the business. That operation was historically high-cost underground, full underground operation. We have been converting that over the last 3 years, and pretty much 90% there as we stand today. Converting it was primarily an underground to an open cast operation. 80% of all our ore today comes from open cast. On the back of that, we also then built up a substantial stockpile, 2 million tons in fact, in front of the new plant, which is a ultra-modern plant which will be running at substantially lower costs than the existing 3 plants which we are going to close down over the next year. That would certainly be, even at these prices, a significant turnaround on the cost base and certainly improve volumes. We're very optimistic.
The general narrative that we've been hearing about commodities is that they've not been doing terribly well. Given that fact, to what extent has the Rand actually helped your results outcome? For
the previous financial year, I would say that the weakness of the Rand from 8.83 in our books to 10.36 has literally mitigated the weaker prices, which are there. With the exception of palladium, every one of our dollar prices, and we are dollar-based company, has weakened, but undoubtedly the weakening of the Rand has played in our favour.
What are your capital expenditure plans? I understand that you're looking at moving into Mozambique.
That's early stage investment. You will understand as a company you do not have ore bodies which are finite life. They are being depleted over time. The purpose of our exploration division per se in the first instance is to find replacements for our existing assets, but those are long-term finds, and we have to decide where to enter and where do we want to get in. So that investment in terms of Rovuma, it's between a green and a brown fields investment. It's an early stage development. We are optimistic about what we're finding, but it is early stages, and ultimately, you know, the success rate of exploration, you would know those are not very high, but we reasonably, and we will continue with exploration. We are targeting other areas in Africa, Zambia and other areas of Africa as well.
Now, this year, the Minister of Minerals is going to tell us which companies were compliant with the mining charter. Are you going to be one of those?
We've certainly met all the requirements with regards to the mining charter. And our focus now is also to reach compliance with regards to the DOL and the DTI. Albeit as a sector, we answer to the mining charter.